Top of the morning to you, and welcome to our newest episode of Capital Markets Quickie from MVP Mind Value Partners. The recovery in the U.S. unemployment growth appears to be stalling. Talks between Republicans and Democrats over another round of fiscal stimulus continues to drag on, and therefore markets across the board closed the week in the red. In times like this, you might assume investors are hunting for safer assets, but you would be wrong. We had quite the exciting week on the IPO market with DoorDash, Airbnb, and C3 AI making their debut on the stock market. My name is Endrit Cela, coming at you from Frankfurt, Manhattan, Europe's financial hub and home to the ECB. Let's take a closer look at what moved the markets this week. Major indexes reached fresh record highs last week before pulling back to finish modestly lower as stalled Washington stimulus talks and the likelihood for a no-deal Brexit killed the good mood. The market appears to be largely focused on the prospects of a brighter outlook driven by vaccine rollouts, and we did get some good news on the vaccine front. Pfizer and BioNTech, which is a company from Mainz out here in Germany, only about half an hour from Frankfurt, were issued emergency use authorization from the FDA in America. And according to US President Trump, all Americans will have free access to the vaccine. But on the other hand, recent coronavirus trends continue to worsen and restrictions in activity are being reimposed worldwide again, and I guess you can say it's the race against time. At this point, the S&P 500 has hit 30 new all-time highs in 2020, and 17 of them were recorded after the late February pandemic-induced bear market, and 4 of them were recorded during the last 2 weeks. So, is this remarkable strength justified considering the recent loss of momentum in economic data, or has complacency settled in? Well, it is a bit of both. But we did see a great amount of enthusiasm in the IPO market this week. So what is an IPO, you might be asking? Well, an IPO, as most investors like to call it, is an initial public offering, or better yet, a stock market launch. And in this type of public offering, shares of a company are sold to institutional investors and usually also retail investors. And investment banks are involved in the underwriting of the IPO, and they also arrange for the shares to be listed on one or more stock exchanges. And the bigger the company, the more investment banks are involved, by the way. So this week was very exciting indeed. As I'm sure some of you might have heard already, Airbnb finally made its debut in the stock market this last Thursday. And they did not disappoint, let me tell you that. Some of you might use Airbnb on a regular basis, and if you love the business and are likely to continue to book your next accommodations on Airbnb, then you might also want to buy shares of the company and participate in their success. Oh, and by the way, this is not a recommendation to buy Airbnb, just a quick and simple way to analyze a company when you're on the go. Airbnb was set to be priced between $67 and $68, but it actually managed to climb up and close the week at $140 per share. Wow. DoorDash, which is an American food delivery service company, also made its debut this week, on Wednesday to be more precise, and the shares were expected to be priced at $102 a pop. However, DoorDash closed the week at $175 per share and even hit $190 throughout the week. Crazy, right? And last but not least, a C3 AI, which is a leading enterprise AI software provider, made its debut this week and also managed to more than double its share price throughout the course of the day. It did, however, lose about 8% on Friday. So what could possibly go wrong here? Well, according to Larry Fink, CEO of BlackRock, which is, after all, the world's largest asset manager, the IPO frenzy is unsustainable and could end in many accidents. He is urging a caution to investors who may feel gravitated to the excitement of recent IPO launches, saying, the question is the market pricing in too large of a forward growth rate for these companies? Well, I guess only time will tell. In the meantime, it's important to remember that it's always dangerous to run after someone or something because you forget to look left and right and up and down, and that is how accidents happen. So, ladies and gentlemen, that concludes today's Capital Markets Quickie. To all of you listening from every corner of the globe, I wish you all the best and stay tuned for our next episode on Sunday, December the 20th.